Hello, in this presentation we will record the transaction in our bookkeeping Excel problem for the receipt of payment from a customer, comparing and contrasting to a process that may be done in some accounting software like QuickBooks. This is the second time we're going to work through the receipt payment. We're going to go a little bit faster, so for more description you can take a look at the prior presentation on the receipt of the payments. If you would like more information about the QuickBooks Pro, take a look at our comprehensive course in the link below. We're going to have this information first looking at what could be done in accounting software such as QuickBooks, then move to Excel, recording the transaction into the Excel process, providing more detail. If we were in something like QuickBooks, then we would be saying we're going to receive payment from the customer. And that typically means that we have already issued an invoice. In this case, we issued an invoice probably for a guitar at this time, and now are receiving payment for that, meaning we're getting a check in the mail possibly, or some type of payment form. And we're going to look at the transaction related to this. In QuickBooks, we would just click on that item, and all we would have to do then is select the receivable who we're getting the item from. And then it will say, hey, these people owe us an invoice. Is this related to one of these invoices that you have priorly input? And we would select the one that it is related to, and that would populate the amount, or we can populate them out separately. And then we would put the date here of the receipt payment, the form of receipt, and in this case we chose the Visa here, and that would then match this out. So the fact that we have the customer payment means accounts receivable typically is going down. The amount that customers owes us goes down, and the other side will be, you would think, cash, but in this case it's going to go to that undeposited funds, that holding account, that account used for holding until we actually make the deposit in a grouped deposit. This is the type of transaction we may not fully see when we enter the data here. This is the transaction needed in order to create the financial statements. This is the transaction we'll see in more detail as we record it in our Excel workbook. Here is our Excel workbook. We're going to record this transaction related to the receipt of payment, and oftentimes if this was in a textbook we would say something like we received payment on account, and that means that we got money, so we got cash typically, but note we don't have just an account called cash here, we got checking account, and it didn't go in the checking account yet. It went into we're just holding on to it. We're going to put it in the checking account at the end of the day. And right now it's just an undeposited fund. So we're going to have this added account added to what normally we think of just thinking of theory, because we're breaking out this cash account to separate accounts. In this case, the checking account and the undeposited funds. The point of that meaning is that we are then going to go and deposit those funds into a group. And when we do so, we will have it grouped together, and that'll help us to track the cash and help us to reconcile the bank accounts. So what we're going to do is going to increase the undeposited funds. It's a cash account. It has a debit balance. We're going to increase it by doing the same thing to it, which in this case is another debit. So I'm going to copy that. We're going to scroll on down. We're going to go to 112. We're in the same date here. It's going to be the same transaction as we did up top, except the amounts will be different. So we're going to select paste special, or paste 1, 2, 3. It's going to be 7,500. And it will differ when we record this to the subsidiary ledger. So remember that as we record it here, we'll also need to record it to the subsidiary ledger, and we'll see that process. So then we're going to have a negative 7,500 as well. I'm just going to say negative of that number, and that's kind of like the plug formula. A shortened version of the plug formula just gives us what we need to be in balance. I need that times -1 if there's only 2 accounts, and that other account then will be accounts receivable, because we got it on account. We didn't earn it this time. We got paid for something we did in the past, and we're tracking the fact that people owed us money. That $16,330 is what people owe us. We have now been paid. It then needs to go down. This is a debit. The way to decrease it is to do the opposite thing to it, in this case a credit. So we're going to copy this account, scroll down, put that in cell G23, right click and paste it 1, 2, 3. We'll then go to the Home tab, we'll go to the Alignment group, and we will indent this information there. Then we'll go through and just post this out. This is called recording the journal entry or journalizing the journal entry in the general journal. And then we'll go through the process of posting this to the general ledger over here, which will then be used to create the trial balance. So here's the undeposited funds. It's right there. It's right here on the trial balance and will be in the same order on the general ledger. So we're going to scroll over here and look for that. Well, before we do that, hold on. I'm going to scroll up top. We're going to freeze the pane. So I'm going to put my cursor here on AJ1, go to the View tab, and then go to the Windows group, and then freeze the panes. By the way, the reason we do this every time instead of just always having the panes frozen is so that you don't just look at the worksheet and start maneuvering it around and it looks funny. So we want to be able to click that and say, this is why it's starting to look funny, meaning this is why when we scroll over this way, those first cells will remain. And then we're going to scroll down, we're going to look for that undeposited funds, which is right here in AU23. So within AU23, we're going to say that equals and just point to that 7,500. When we do so, the undeposited funds will increase to 12,500. Just going to scroll that back with the left arrow, scrolling back. If we scroll then up, we see the undeposited funds there as well, 12,500. We see we are out of balance here, and we need to record the other side, that to accounts receivable. Accounts receivable is going to be the second account here. It's going to be the second account on the general ledger as well. We want to record this right here in the accounts receivable. We're going to be in the credits side, so we are in cell AR12. AR12 equals, and then we're going to point to that 7,500. That will bring the 16,003 balance down to 8,830. If we scroll back over to the general ledger, we see that balance here, 8,830, and we see that we are in balance down here as well. Other thing we have to do, remember, that is we recorded this into the receivables. The receivables up here represents what is owed to us. We need to reduce that to not just to the general ledger account, recording the receivable by date of transaction, but also to the subsidiary account, recording who owes us this money. In essence, just recording the same information but in a different ordering, in this case in ordering by customer. So we're going to scroll back over, all the way over till we get to the subsidiary ledger. We're going to see green items again at some point. So here are the green items. Here are our customers, and we have Jones here is the one who paid us. That's nice, because we're going to say that we have this credit, and we're going to say it's the same credit. This same thing is being recorded. It's just like we're posting it to the general ledger, and it's just like a different general ledger that's just in a different order. And we're going to say that that's the 7,500. So Jones no longer owes us that and is down to just owing us that 399 from that second invoice that we had input. And if we were to add up all those amounts then, for the people that owe us money, the customers that owe us money, it comes out to 8,830. That then should also be found on the general ledger. I'm scrolling left to see that that is the case, that 8,830 is on the general ledger, as we hope it will be. There it is right there, 8,830, also found on the trial balance, 8,830. We are back in balance, I believe. We already checked that. Yes. No effect on net income with this transaction. Note, nothing in the sales, nothing in the expenses. And even though we got cash undeposited funds because we earned the revenue in the past and recorded it in the past in accordance with the revenue recognition principle. We're going to go ahead and unfreeze the panes now. So I'm going to go to the View tab, Windows, Freeze Panes, Unfreeze, and then just check out the financial statements. So we messed with this account. We made some changes to it. We fixed it. We didn't mess with it. We fixed it. And then we went here and we did something to that account. So if we were to generate the financial statements, I'm just scrolling right, all the way to the right. We could then automate the financial statements, pretty much set up automatically here. There's the change to the undeposited, which again, probably should be included as part of cash, but just breaking that out so you can see the separate line items. It will be in cash once we deposit. the funds. And then we've got the receivables here. We've got our total assets and our total liabilities and equity. No impact from this transaction on the income statement. Here, there's our net income, and here's our statement of equity, the ending balance here being the same as the balance there, and that's this information.